Canadian banks directed more than $100 billion in financing to fossil fuel companies in 2023. That's according to the latest Banking on Climate Chaos report. Richard Brooks is finance director at Stand.Earth. Richard, thanks for being with us.
Thanks for having me.
So nothing in this is surprising or unusual. Banks finance businesses, and they did that. Is the purpose of the report to shame the banks? What's the hoped for goal with this number?
The purpose of the report is really to bring visibility to the contributions that banks are making to the companies who are behind driving the climate crisis. These figures are figures that are compiled from various information sources that aren't very accessible to the general public. And we think it's important information to for people to have in Canada, to know which banks are playing a role in helping fight the climate crisis and which ones are hindering it or which ones are making it worse. And this annual report does that by sharing the numbers that really matter. When it comes down to it, Canadians need to know that our banks are amongst the largest banks in the world when it comes to funding oil, gas, and coal companies. And those are the companies that are very much behind the extreme weather that we're facing now on a daily basis. Fire season has broken out in Alberta and Saskatchewan already. We had the worst fire season on record last year, highest temperatures that we've ever experienced on this planet. And part of the reason for that is because of the vast emissions coming from fossil fuel companies that are backed by these banks.
So, they could make a case that in order to stop the financing, we need to stop, of course, the businesses themselves, that the banks are just facilitators of our economy. But is it your hope that they, because their customers might want them to, would change their behavior and stop financing some of these industries?
Well, we're hopeful that we take a kind of all involved approach here. I think customers of these banks, shareholders of these banks, corporate customers of these banks, all have a responsibility to engage the banks who are so important to meeting our emissions reductions goals. As a country, we cannot reduce our emissions by 40 to 45%, which is our stated goal right now, if we don't have our largest financial institutions on board with that journey that we need to take. Right now, they are very much stepping on the brakes when we need to be stepping on the accelerator in terms of financing the energy transition. So on the flip side of this, while they're doing a lot of business with oil and gas companies and are continuing to drive emissions up via that business, they're underfinancing the energy transition. So they're not putting enough money into renewables, into efficiency programs. And that's something that I think all Canadians need to know about and challenge their banks to do better on.
Would you agree that the best way to achieve that aim is to have governments set policies and regulations that shape the profit outcomes? In other words, the banks will follow the money. If the regulations direct them in the way of this transition, they'll do that. But if they don't, they're not really geared towards that.
Yes, well, I think that's the message that we're hearing loud and clear now. We've been, as a civil society organization, pushing the banks for several years now to do better, and kind of relying on voluntary initiatives by the banks to line up their financing with the energy transition that we need to see. They're not moving fast enough. They're continuing to contribute to the problem. They're continuing to put more than $100 billion in 2023 into fossil fuels, including a lot of expansion projects that lock us into emissions long into the future. And so we need Finance Canada, we need our financial regulators in Canada to step in and start regulating the banks into lining up with the energy transition that we need to see. They really need to be more part of the solution than the part of the problem, which is where they're at right now.
Richard, thanks for being with us. We appreciate your time today.
Thank you very much.
Richard Brooks is finance director at Stand.Earth. Time for the takeaway and giving new meaning to better late than never. When Uber arrived on the scene in Canada, it dropped like a bomb into the middle of the taxi industry. Driven by ease of use that was way more customer friendly than the outdated cab system, Uber took off. And in places that tried to resist it, won the day by sheer force of customer demand. One of those places was our nation's capital, which held out for a couple of years, but eventually succumbed to the lure of the app. Now, a judge says the city of Ottawa could owe taxi drivers there a bundle for failing to regulate the newcomer in the same manner as cab companies. the result of which was the dramatic drop in the value of taxi medallions, in some cases 90% or more declines. That left owners of those assets with huge financial losses. The amount that could be at stake is $215 million if the taxi drivers get their way. A judge will still decide, or more likely, the city will make an offer. But the case is a clear indication of a new era in our relationship with big tech. Becoming addicted to how fun or easy it is not enough of a selling feature to overlook its potential damage. Provinces are taking on social media firms over their effect on kids, and there's a growing, if slow, awareness that artificial intelligence should probably not be left entirely in the hands of for-profit enterprise. Unfortunately, the Ottawa ruling underscores something else, which is how slowly the wheels of our justice system turn. And of course, we know that laws and regulations are all too often fighting the last war. But if nothing else, the victory for Ottawa's taxi medallion owners is a reminder to us all that technology is only and always as good as the way it's used, and that how we allow it into our lives is very much in our hands. My takeaway? It took a while, but it could be we are finally waking up and realizing we should control technology, not the other way around. That's Taking Stock for this week. I'm Amanda Lang. Thanks for being with us.